Khash Saghafi, Liberty Home Mortgage. Today's topic on my hundreds of videos is PMI bad, private mortgage insurance, okay? So as with all my videos, I always try to give you nuggets of knowledge, right? I always hear customers say, Khash, PMI is horrible, okay? There's the belief or what's out in public is PMI is terrible. Let me tell you this one. Let me just keep this short and sweet. And I always give you like the answer to everything, and then hopefully I can keep you for the next couple minutes of the video to explain why. But let me start with this one. No, PMI is not bad. Here's one for you. Without mortgage insurance, you have to put 20% down when you buy a house. Can you imagine that one? PMI is the whole reason you don't have to put 20% down. Now, what is PMI? Okay. PMI was created by a company called MGIC in the 1950s. And banks did not like giving high-risk loans, so they would make somebody put down a lot of money, okay, just to buy a home. I think the original FHA loans, I think you had to put 50% down, okay? You had to put up a lot of money. Even today, back in 2007, 8, 9, HUD did a study, and listen to the findings they found. God knows it probably only costs $100 million to do this. They concluded after much research that somebody who puts more money down on a house has a lower delinquency and foreclosure rate than somebody who puts less money down. They could have just called me on the phone. But anyways, beside that one, okay? So it used to be where banks made you put down 20, 50% just to get a house. That's it. You got to put up your own money too, okay? Then a company came along called a mortgage insurance company. A mortgage insurance company. So what they said was, hey, if a home buyer puts down 5%, okay, even 3%, even with down payment assistance, you can go no money down, so all this crazy low down payment loans, let's just say 5%, you put 5% down, we, the insurance company, will insure the top portion of that money for the bank giving the loan. So when they started doing that, banks started saying, screw it. You don't have to put 20% down. You could put 15%, 10%, 5%, 3%, no money down, things like that. So with the advent of mortgage insurance, that allowed homeowners to get into home ownership with significantly less money down. So now the next time out there somebody says, is PMI bad? It lets you buy a home with less than 20% down. And I always tell this to customers because I hear it all day long. Hashtag terrible, I don't want to pay PMI, okay? Listen, come up with 20% down. You put 20% down, I'll never talk about PMI. I'll never talk about private mortgage insurance. When you put 20% down, there's no mortgage insurance. There's no PMI on it, okay? So that's the easiest way around it. If you don't like it and you hate it so much and it's so terrible, hell, just come up with 20% down. But then when you're sitting here saying, I don't have 20% down, what you should be saying is, thank God something exists which that can cover this portion of the loan such that I only have to come up with 5% or 3% or 10% or something like that. So PMI, private mortgage insurance, it's extremely good. I think it's incredible. It has opened up millions of people to owning a home who otherwise would never own a home. That's how you have to look at private mortgage insurance. Now, here's another thing for you too. With PMI, when you have PMI on a loan, after a certain amount of time, it comes off. Also, that's another thing too. There's actually laws on when the mortgage insurance comes off. I know a lot of people say, Khash, it comes off automatically at 80%. It's actually 78%. There's different rules for it, okay? If you're using the value of the house when it was originally taken out, most people get rid of the PMI by simply refinancing the loan because after a period of time, 3 years, 5 years, 7 years, 10 years, you have something built up in the house called equity. So suddenly, you did not have the 20% down when you bought the house. You waited over time. The house went up in value. Now that higher value versus what you owe now has that equity position in it such that you refinance and you get rid of the PMI. So PMI is not forever. Okay, it doesn't last forever. You could get rid of it. There's multiple ways to get rid of it. but it lets you get into a home with less than 20% down, the traditional number. So make sure you're paying attention to that. PMI is not bad. Pay attention, follow my videos, make sure you're subscribing, you're liking, you're commenting, and if you're a real estate agent, you should be sharing this message on your page for all of your borrowers and people to see. And of course, if they need a loan, I'm in 45 states, call me. Talk to you guys later, thanks.